Alright guys, in this video we're gonna take a look at the shooting star pattern, and this right here is an example of a shooting star. So we are gonna take a look at what a shooting star is and why it is important and useful in trading. So yeah guys, without further ado, let's jump right into the video. Right, so the first thing I want to do here is that I want to zoom in a bit and take a look at the candlestick. So the shooting star pattern, what is it? Well, it is a bearish reversal pattern. And that means that the shooting star might indicate that the price action will change from a bullish or upwards direction to a bearish or downwards direction. So it indicates a potential reversal. And the shooting star is a pretty simple pattern because it only consists of one candle. So in previous videos we have been, for example, looking at the morning star and the evening star, and these are patterns that consist of 3 candles, but this is a more simple one. Now let's take a look at how the shooting star actually looks like. So the first thing about the shooting star is it must occur during an uptrend. So prior to the actual pattern, we might have had some bullish candles, maybe look something like this, and the trend is in general upwards here. How does the candle actually look like? Well, it has a small real body near the bottom of the pattern, and it has a long upper shadow and little to no lower shadow. So we can just have a little shadow right there. So it looks something like this. So we can write it down. It has a long upper shadow, so that is this part right here. And by the way, if you are unfamiliar with any terms I'm using in this video, I have a video about some basic Japanese candlestick terminology, and we'll link it up in the corner in the eye. But it has a long upper shadow and little to no lower shadow. So preferably this, you can see this little shadow below the real body should be as small as possible. So long upper shadow, little to no lower shadow, and a small real body. We can say near the low of the day. And it's this part right here, which is the real body. All right, and it can also be worth to mention here that the color of the candle is not that important. It can be a valid shooting star if the candle is green or if the candle is red. It doesn't actually matter too much here. Some other things I think worth to mention here is, so the ideal shooting star has a gap between the previous real body. So a gap is basically that we have some space in between this point and this point. So the lowest point of the red real body and the highest point of the previous candle's real body. This is something called a gap. And the perfect shooting star pattern has a gap in between these candles here, but that is not a requirement. And another thing to mention here is that the shooting star often needs confirmation, at least if the shooting star appears alone with no support of other technical data, for example, resistances, divergences, oscillators, and so on. So if we don't have a lot of technical data, we often want a confirmation that the shooting star is valid. And a confirmation is basically that the next day, so this day, that we get a red candle, and ideally we want the red candle to close a good amount below the shooting star. So this right here is a confirmation. All right, but I think we are now ready to look at some real life charts. But before doing that, I just want to give a quick disclaimer that everything in this video is for educational purposes only, and nothing in this video should be considered financial advice. But yeah, now let's take a look at some charts here. So we can actually start by the one we took a look at in the beginning of the video. This right here is Intel, a big tech company in the US, and the shooting star is the candle right here. So let's take a look at why this is a shooting star. Well, the first first criteria is that we have a upwards movement prior to the pattern. So right here we had an upwards movement, so that is good. The second criteria is that the actual shooting star has a small real body, and we can see that it does have. So a small real body and a long upper shadow. As a rule of thumb, we want the upper shadow to be twice as long as the real body of the candle. So we want the upper shadow to be 2x the real body. And we can see that this upper shadow is much more than 2 times larger than the real body. So that is true. And here we also got a confirmation candle here, and after that we saw the start of a pretty deep price decline. Let's take a look at one more chart here, and the stock we're looking at now is Goldman Sachs, a US bank, and the pattern I'm going to take a look at here is this one right here. And this one might look familiar. It is a shooting star pattern. Why? Because we had a price increase, a upwards or bullish momentum prior to the candle. The candle appeared, we had a small real body near the low of the day. We had a shadow that is more than twice the size of the real body, and we had actually a small lower shadow here, but the lower shadow was so small, so I would still consider it a shooting star pattern. And after this pattern occurred, we actually saw a steep price decline, and this pattern played out pretty well. Yeah guys, I think that's pretty much it for this video. If you found any help or value out of it, please consider dropping a like. And if you guys want to see more, don't hesitate to subscribe and hit that notification bell. I hope you guys have a great day, and I will hopefully catch you in the next video. But for now guys, take care, ciao ciao.